So, thank you, Walter. A very good morning. You're just on the back of some big announcements in the region. So, can you tell me a little bit about that?
Vish, always good to have a chat. Yes, of course. Chocolate Finance, we're really proud to say that we've just launched our Chocolate Finance or Chocolate Business accounts or accounts for business for SMEs and corporates. And the idea is really simple. We've realized that everybody or all businesses are sitting on cash in banks, just kind of not doing anything while it's waiting for payments and other things. And all we've done is built a solution which just gives people a better return on that cash while they're when they need it and instant access anytime. So the Chocolate Finance business accounts are now live and launched. And today's the day we're signing up lots of customers.
Wonderful. So, you started Chocolate Finance basically with a consumer cash management proposition, and which has now moved into chocolate business.
Mm-hmm.
So, what prompted this expansion into business accounts, and what gap do you see in the way Singapore companies have been managing their idle cash?
Yeah. Look, I think cash is probably the most undermanaged asset class there is. We started in a consumer or retail space because everybody's got cash in the bank that's sitting there doing nothing or earning a very low return. And our job really was to give people a slightly better return on that cash. That's all we do, right? Just give you a better return on your cash and make it really easy to do it and get access to your cash anytime. There's $1 trillion of cash sitting in Singapore in accounts doing very, very little. But what we realized was that this problem around cash earnings was not just an individual problem. There are a lot of businesses that have exactly the same need. A lot of businesses are sitting with cash in bank accounts, just not really doing anything. And if you can get a couple of extra bucks a day on your cash in the bank, why not, right? And that's proving to be quite a good story, and people are really looking for that.
Right. So, you have said that businesses often earn very little on cash sitting in bank accounts, even though they need that money for payroll, suppliers, and unexpected needs. So, how big is this problem for SMEs and business owners in Singapore? And why has it remained underserved for so long?
The problem is huge. Like I said, there's $1 trillion of cash not really earning good value or good money at the moment. We think that, well, there's some reports we saw that show that individuals and businesses are missing out on about $800 million a year of just interest that's not getting anything, right? The second question is, why are people not doing anything about it? And the answer is, well, there's a bit of inertia, right? You just keep your money in the bank because you're just used to doing it. That's what you've always done for 100 years. There's never really been a really easy, neat, clean way to just get a little bit of extra return and then get your money back whenever you need to. And now that's what we've solved with chocolate, so that businesses can get 1.5% return on their cash and then just return it to their bank accounts whenever they need it.
But the fact that this doesn't get covered under SDIC, do you think that's an issue with some of the companies or most companies?
Not at all. In fact, the construct is very different. If you give your money to a bank, you're actually giving your money to a bank. And therefore, if the bank goes, then your money is gone. That's why you need to have an SDIC. But if you put your money with chocolate, you're not actually giving it to us. Your money goes into a separately segregated, ring-fenced, custodized account, which is then invested in investment-grade corporate bonds to deliver the returns that we need to deliver, so that if anything ever happens to chocolate, your money is always safe and secure in that segregated account. So there's no need for an SDIC approval or insurance on top of that, because your money is yours always and sticky regardless of what happens to chocolate.
Right. So, obviously, you position chocolate business as a cash managed account. For business owners who may be used to, traditional banking products, how would you explain the difference? You just alluded some of it there in the previous question, but particularly in terms of liquidity, risk, and returns.
Yes. So for a traditional bank, everybody always needs a traditional bank. You need to make payments and receive money and all of those things. But your store of money sitting in the bank is actually idle. It's just not doing anything while it's there. So all we do is we create a little mechanic where you can say, once it's in the bank, if you want to get a bit extra return, you swipe it into a chocolate account, and when you want it back, you swipe it back. Chocolate already manages more than $1.7 billion of assets already on behalf of retail and corporate customers. It's all in investment grade corporate debt, structured, in a protected environment so that those returns are guaranteed to stick around, and when you need your money, you just swap it back, and it works. We've got 150,000 customers retail that are enjoying our products and getting use of it so far, and now we're making this available to corporates as well.
Right. You've grown, I mean, you just mentioned about 1.7 billion in assets under management. And I believe over 150,000 customers
Mm-hmm.
the last 2 years. So what has this growth actually taught you about how Singapore customers and now businesses think about cash and liquidity and trust on non-banking financial platforms?
We live in Singapore, which is the most highly regulated financial services sector there is, right? Chocolate is licensed as a financial fund management company in Singapore under the supervision of MAS. So having the ability for companies or individuals to have an alternative place for their cash is exactly what we've decided to do, or what we do. This is new. It's different from a traditional bank. It works in a different way, but what it's really designed to do is to give you a better return on your cash. And what we're trying to overcome, and what we've learned, is all we really need to do is to educate or make people aware that actually you don't need to get nothing on your cash. We've all been taught forever that cash is just commodity that you park for later use. But actually, no, cash is an asset, right? And so why don't you maximize the value of your asset? And because it's maximizable, you just need something like chocolate to help you to get a better value and a return on it, so that you can still have access to it any time that you need it, without any lockup or any hoop or anything like that.
So in your career, I mean, it spanned sectors across insurance, banking, asset management, and of course, the founding of the now famous Singlife
Mm-hmm.
before you started Chocolate Finance. How has this whole experience across the entire financial spectrum, I mean, shaped the way that you're building chocolate, and especially around simplicity, regulation, customer confidence, and product design?
Yeah. I think all people deserve a better way to manage their money. I've thought that when we built insurance in the Singlife, we built a much more engaging digital executional franchise for transforming how insurance works. And that was really, really new at the time that Singlife started. Now, 10 years later, everybody has a digital insurance capability. What we're doing now with chocolate is the same basic fundamental change to help people get a better return on cash. While we do it in a slightly different way, we're not a bank, we're an asset management company, but the same objective is there: get a better return on cash. And I'm very sure that in my learnings is that what we do now, which people say, oh, that's new, in 5-10 years time, it's going to be, oh, that's how we do this stuff, right? This is normal. And that journey just takes a bit of time, but we're starting to see it grow and snowball very, very quickly as people realize actually making some money on my cash is not hard. Do it, right? It's like, it's one of those things, you have to do. You have to floss your teeth every now and then, but you just can't ever remember to go and do it. It's one of those, but if you just do it, you realize it's actually quite an easy thing to do if you just go and do it. And that's what we do.
Right. So, I mean, Chocolate Finance, you say that makes money only after it has met its target return.
Mm-hmm.
What does it exactly mean, and how important is this for building customer trust? So,
Yeah.
as a customer, how does this really impact?
Yeah, so I think the rationale here is Chocolate is an asset manager. We have to, if you put your cash in a Chocolate managed account or a Chocolate business account, we have to deliver a return on that. And so what we've decided is, unlike other companies that make money no matter what, if your money goes up or down, whatever, we only make money if we deliver the returns that we promise, right? So in order for us to deliver the 1.1% or 1.5% return on business accounts, we have to make slightly more than that on the underlying assets. And if we don't make more, our obligation under the Chocolate Top-Up program is to make you whole at the 1.5%. But if we make something more than that, our fee structure means that we have some participation in the upside to cover the risk of the downside. But if we don't make the returns, we don't eat, which means that there's 100% alignment between our interests as a company and your interests as a customer in delivering returns that are dependable.
Right. So, is this something very unique among asset management companies? I mean, what you're doing, or is this that, I mean, you kind of used it as a USP to position yourself, whereas most other asset managers also probably follow the same rule?
Yeah, I think most other asset management companies, they make money. If it goes up, what goes down. They just charge you a management fee, and that's their job. We did it differently in a way. We thought, well, actually, that's not right, right? To do your job as an asset management company, you actually have to deliver the returns, right? And if you can't deliver, why should you get paid? So if you think about it that way, I think there's like I said, a better alignment. I think many managers don't want to do that because there are times when it goes down and you have to kind of make whole. But I think it's a better way to do it. I really think that, why should you take the risk as a customer? And how do I earn your trust if I'm not willing to put my money where my mouth is and say, hey, this is what I'm going to do for you and I'm going to do it really well.
But asset management companies where they offer a fixed rate of return, I mean, they also probably follow the same rule, I guess.
Most asset management companies don't offer fixed rate of returns. And if they do, they normally do it over a locked up period. So our business model is actually fundamentally different. There's a lot of innovation that goes into it. For example, my experience coming from an insurance background has a different way of thinking about how to match the assets that we hold with the liabilities that we hold. So it's a different way of thinking to a traditional asset management firm. It's much more insurance in its thoughts. But if you really just peel it all back, is to say, how can I deliver a solution which is around enhanced cash returns with all of the liquidity that you'd expect from a everyday access account? And how do I use the regulations, the tools, the asset management, insurance company, banking tools to deliver that? And we found that an asset management infrastructure is the best way to do it. I actually did this before when we were at Singlife. We had a Singlife account, and it was actually an insurance contract. You had to put money in it and take any money out and get an interest rate on it. But it wasn't nearly as efficient as what we were able to do now with the Chocoloate enterprise.
Right. So as an investment philosophy at Chocoloate Finance, I mean, you mentioned that you invest into government bonds. So is that the only place where you invest, or also you invest into equities?
No, our job is to make sure that we can deliver you a return. And, of course, equities is far too risky for a cash-like product. Everything has to be very, very secure and safe. What we have to manage on our side is the volatility and the returns. Of course, if we can't take your cash and invest it in cash because we wouldn't be able to give you a good return. So we have to take a little bit more duration on the assets to deliver the returns that we can. But things like equity would be far too volatile to back a cash offering. So it's all about managing the customer's needs and the volatility of the balance sheet so that we can deliver the returns we can in a safe, trustworthy, always on way, which we've been able to do for the last 2.5 years since we started.
But how did you come up with this name Chocoloate? I mean, for a finance company, that's new.
Yeah, well, everybody loves chocolate. Chocolate makes you happy, and we want you to be happy about your money. That's the simplicity of it. And but the science behind it really is, we think that money is an emotional thing. Money is important to you, and for most people, money is an anxious thing. It's like, do I have enough? Am I going to get out at the end of the month? Am I going to be able to budget? It's a stress. How can we create a business where money is not stressful, where you can sleep better at night, that knowing that your money is in good hands and that it's going to give you a decent return and you can get it out anytime that you want to? And the idea of a Chocoloate Finance being a happy place for money was really the idea around how to connect the philosophy of what we're trying to do about giving better returns and ease of money with the technology and the capability and the infrastructure that we do. And chocolate just seemed a great way to describe it. And you'll remember it, right?
Yeah. So what does the future look? I mean, I guess earlier this year you also launched in Hong Kong.
Mm-hmm.
And so are you happy that you're completely out of the woods from the controversies that happened a couple of years back?
Yeah, look, all new businesses go through a couple of ups and downs, especially when they start. It's natural. I think what we've demonstrated through the last 2.5 years is that, sometimes a bump in the road actually leads to many, many more opportunities. Yes, there was a bump in the road where, some noise in media, but it turned out to be a bump in the road, and now we're 3 times bigger than that, and everybody knows who we are, and more importantly, everybody's money is safe and everybody gets their returns, and it works just like it says on the box, right? So In some ways, that publicity that we got out of that was actually very beneficial to the firm because it proved that, hey, chocolate works. It does what it says it's supposed to do, and everybody gets its returns, and it's all good. It doesn't matter what people on social media might say. Yeah.
So what does the future look like?
So I think the future is definitely evolving. If you think about banks and insurance companies, they've been doing the same old stuff for hundreds of years, and we all know that technology is changing, psychology is changing, choice is changing, regulations are changing. And all of this means that the way people think about money in the future is going to be different about the way they've thought about it in the past. Yeah. And businesses like chocolate will be able to deliver more for people just because of this change in technology and behavior and regulation and all these other things. We will be able to do more for customers now and in the future. At the moment, it started just purely on cash, but in the future, it'll move into payments and remittances and cross-border and all those other things that you'd love to be able to see. You don't necessarily need to be a bank to do that. There are other ways to do it cheaper, better, faster, and actually as quickly as you can. That's in the banking space, and I think for especially for SMEs, the trick is how do I start with just getting a better return on my cash, then slowly we will add more services around how do we better utilize that cash for business needs rather than just sweeping it in and out of a bank account.
So geographically, I mean, you've now expanded to Hong Kong. Do you intend to?
We've expanded to Hong Kong. We've just been licensed in UAE, which we'll announce pretty soon as well. And we have ambitions for a couple more markets around Asia. But in the meantime, the first thing we have to do is just make sure that we get it right wherever we start, and then slowly expand as we grow.
Right. So 5 years from now, if you were to look at Chocolate Finance, right? I mean, how would you want it to stand it for? I mean, what would you want it to stand for?
I want chocolate to be a happy place for your money. I want you to have access to your money and get a decent return on it, and I want you to sleep better at night knowing that your money is in a decent spot. Yes, we start with cash, but slowly that will broaden to other parts of your financial well-being, whether that'll be everything from just cash to a little bit more longer term wealth or retirement or other kinds of savings, or if it's around tracking your assets and liabilities or getting some financial advice. These are all components of what the technology of today can add. So I think, I wake up in the morning and say, yay, I'm going to work today every day because I'm building cool stuff. And it's cool stuff that people actually will use and will get value from. And that makes me really happy and motivated. And so I'm going to keep doing more and more cool stuff just to build better stuff than what people have seen before. That's the plan.
Okay. And to wind up, I mean, the one question that, I mean, one can't do away without asking is, how are you implementing AI in all this? And will there be stuff that is, rolled out to the customers? I mean, in terms of today, we're talking of agentic AIs, and probably it's coming in so fast. So how do you see that whole?
There's a whole host of AI work that goes into these businesses these days. The first part is just purely producing the product. You can actually bring things to market much faster now with the help of AI. But not only that, you can then operationalize it. So things like, the business processes that you would ordinarily have done with 2 or 3 people. Now you can do it with one person because there's got a whole bunch of AI assistants around it. So you've got the product's built that is enhanced with AI. How the product is operated is enhanced with AI. But where it'll all go in the future, as well as there'll be new components around that will also be AI assistants. For example, if you need transfer money from A to B, yes, you can go in and push some buttons, or you can just, ask it. And, those kinds of AI will all become part of it. AI advice, AI managing. This is the direction of the future. And I think chocolate will be a part of that journey as we grow and learn. We're operated with a very, very small team of people. And it's really important to be small because lower cost as a business for us means we can give better value to you as a customer, whether you're a retail customer or a business customer. And so the AI enhancement to make our business more efficient means just better value to customers. And I think we can do that way better than banks and other old-fashioned businesses can do.
Wonderful. So great speaking with you, Walter. Thank you very much.
Yes, nice to meet you also. Thank you. Good stuff, man. Thank you.
Thanks.